Welcome to the question of the day. Today's question is from Tim in Missouri, and Tim asks, what do you do when you get stuck on financing? That's a great question, Tim. And actually, these are my favorite customers. My favorite customers are challenge credit customers. Early in my career, they weren't, but I learned in my career that these actually are my favorite customers to work with. Are they more work? Yes. Do they take more time? Yes. Do they always work out? No, they don't. But in my experience, unofficial results, I don't know, 9 times out of 10, they work out. And it takes more expertise, more knowledge. But usually, if you're willing to put in the time, put in the work, and you have the expertise and know what levers to pull, like this usually works out for you. And the flip side of this is these customers, they are super loyal to you. They don't like their scenario. They don't even understand their scenario. Most people don't understand their scenario. Financing is a complex beast, but you were willing to spend the time and the energy and navigate through these troubled waters when no one else would. And so because of that, they become very loyal to you. And what's better than helping your fellow man? I remember early on in my career, now my first sales job was selling used cars, used Subarus, and we had this dude come in, and honestly, this was the baddest looking dude I'd ever met in my life. This guy was tough, right? Like if you were making a movie and you needed to cast a tough guy, this was the guy. Like I was actually scared working with this guy. Like I thought this guy was gonna like eat me up and spit me out. And he was looking at this old used car, and we took it for a test drive. He said, "Yeah, let's move forward with it." We submitted the financing. He got declined, and I was kind of nervous about this. I was like, "Oh my God, I hope." And we're alone on a test drive. So we come back, and so that one didn't work out. So we start talking about what our next options are, and we pick out the cheapest car on the lot, the oldest used car we got, the cheapest car on the lot. We submit financing on that one, declined. Problem was, we didn't really understand how financing worked. Now, I had a sales manager that stepped in and knew that there was different levers to pull. One of those levers being loan to value, right? Banks look at loan to value, and these used cars with this customer's credit just wasn't really working out. But we had recently had a hailstorm come through, and we had some new cars that got hailed on. And so the loan to value looked really good on those cars. And long story short, we ended up submitting financing on a brand new car and he got approved. Not at a fantastic rate, but he got approved. This dude, this baddest looking dude I'd ever met in my life, I was scared to go on a test drive with him, thought I might not come back, scared to give him back bad news. He cried when we got him approved. He cried and he hugged me hard too. Like he squeezed me, right? Because he opened up after this and he started to share with me like he didn't know what he was going to do. He needed to figure out how to get his kids to school. He needed to figure out how to get to his job to support his family. And by figuring this out for him, we made all that possible. We didn't give up on him. We found a solution. And that baddest looking dude just became a puddle of tears and hugs in a car dealership. So like that right there is when it clicked for me that these customers, these are my favorite customers. Yes, they take more time, more expertise, more effort. They don't always work out. But I mean, you want to make a difference. These are the customers you can make a difference with right here. So here's what I would say financing. I want to go back to even before we get declined, but then I'll talk about what happens when we do get a decline. First thing first, as a company, from a company view, set yourself up for success, right? I want to have a number of financing options. I should probably have an array, something like a first look. This would be your common financing. This would work for most customers in most situations. So I want to have some kind of financing like that. That's going to be your bread and butter, right? Secondly, I want to have some kind of second look, right? This is more geared towards challenged credit customers so that I have a bank I can use in those types of situations, right? They're going to be a little more forgiving, higher interest rate, more stipulations, et cetera. But at least I have a path forward. And then thirdly, I probably want to have some kind of alternative, right? So this could be like a leasing program or a rent to own program, something that's It's going to be a little more forgiving, but for those customers that I absolutely can't get approved, I may have another avenue to go down. So if I have a variety of lenders here, that allows me to put myself in a position to be successful. And I guess a couple of things I would say about this variety of lenders is one, make sure you're keeping up with them and renegotiating terms with them sporadically. Like if you watch right now, like what's going on with interest rates go up, interest rates go down. When the interest rates go up, your lender is definitely going to tell you that because they're going to, renegotiate the terms of the deal here. But if rates go down, they're probably not going to reach out to you. So make sure you're taking the initiative to reach out to your lender and say, "Hey, saw rates are going down. How does that affect me? How does that affect what I owe you when we're signing a deal here?" So because they're not going to call you and tell you that. So keep up with those lenders, right? I would also say shop lenders, keep them competitive with each other. I mean, their job is to serve you. If you're having trouble with one lender or you're running into challenges and they're not being very helpful, start shopping around. Their job is to serve you. Their job is to help you get sales. And so shop them around if you need to. Um, at the very least, they're gonna stay competitive in your favor because they want your business. They want to keep you as a client. And so don't be afraid to renegotiate or shop lenders when you need to, so that you can have this variety of lenders that is helping you in these scenarios. So that's number one. Set yourself up for success. Number two, okay, so now we're with the customer. This is a common mistake that I see as I'm riding along with companies. A lot of companies, what they do is they submit the financing and they just leave it with the customer. So they say something like, all right, this is going to show up in your email. Just go through, fill it out, and we'll be all good. Don't do that. Stay with your customer during the finance process. I'm going to repeat that. Stay with your customer during the finance process. There's so many things that could go sideways here. You think you're about to leave. They have not been approved yet. They might not be able to figure out the technology. They may change their mind and just not do it. Just stay with your customers until the financing is approved. So make that part of your process. You do not just leave it with the customer. You stay with them and help them navigate this. Does it take longer? Yes. But many deals are lost when you just leave it for the customer to figure out. And if you do, I mean, if you do that, think about that. All the time you were with the customer, wasted time. Wasted time because they're not going to track you down to get the sale. The next guy will just help them figure it out. So wasted time. All right, so now we're at the position where we made a sale, we submitted the financing, they get declined. Now what? What do we do? Dead in the water, right? Most companies are going to give up. And they're going to think, yeah, what do you do? Or oh, poor me. This is what happens. Like I get all the credit declines. This is the difference between good and great. A great salesperson is going to dig in and figure this out. It's a risk, but 9 times out of 10, you will figure it out. 1 time out of 10, yeah, you get burned. Just you wasted your time. But that's only 1 time out of 10. 9 times out of 10, though, you'll get something out of this. So here's what I would do. When I'm with my customer, they get declined. There's a couple of actions that I take to navigate these waters. So the first action I would take then is call the lender. I'm going to do this with the customer because probably when you call the lender, they're going to say, hey, we want to talk to the customer. And you can do this on speakerphone and the customer's right there and they'll say like, yeah, he has my permission to speak on my behalf, or we can do this together, right? Like, but call the lender with the customer. Okay. And when you call the lender, what I want you to do is I want you to ask to speak to a manager. Because when you call in, what happens is you're talking to a frontline staff person. You're talking to a call center. And there's nothing wrong with frontline. There's nothing wrong with a call center, but that's not the person I want to talk to in this scenario. Frontline call center, they don't have any pull. They're just using what's in front of them. They're using the formula built into the computer. And many times they don't even understand what goes into the formula. So I want to talk to somebody that has a little bit of pull and can help me out in this scenario. So I'm going to call into the lender, identify who I am, tell them I'm with the customer, and then I'm going to say, I'd like to speak to a manager. Okay. So when I get to a manager, this is the question I'm going to ask them. I'm going to ask them, what do we need to do to get this approved? That's the question you ask the manager. What do we need to do to get this approved. Now that manager, they want this to sell as well. They want to get this deal. They make money off of this as well. So they want to. And if the customer is there on the phone with you, they're going to give you the path. They'll tell you what you need. They're going to say something like, well, you need more money down, or how much money down, or a cosigner. They're going to tell you what you need in this scenario. And now I have a roadmap. Now I can turn back to the customer and we know the rules of the game. We can figure this out. We need more money down. Is there any way that we can get that kind of money down? We need a cosigner. Is there anybody that would be willing to be a cosigner? Like, we can figure out a plan of attack to get the things we need to move this forward. Now, often this is where it's saved because you ask that question and the customer, they know the details and they can figure this out. Now, the other reason that I want to have the manager on the phone is sometimes we can't quite get there, but we get close. Again, a manager, they want this to get funded as well. And so sometimes if we get close, the manager has the power to bend the rules a little bit. So let's say, for example, they said to get this approved, we need $3,000 down. We work with the customer and like all we can come up with is $2,500, right? Like we're pulling out of savings, pulling out of checking, we're borrowing a little money here, whatever. They can come up with $2,500 down. We explain that scenario to the manager. Sometimes, not always, but sometimes they'll be willing to bend a little bit if we can get close. And then they'll fund it. Now, the other thing that I would do, and this is just situational, I wouldn't do this every time. So don't take this as like I'm a lying salesman here. I want this to be a true story, but sometimes there's a situation where there's a little bit of a story to be told too. And you can step up and you can go to bat for your customer. I had a scenario one time where as I was talking to the customers and we were navigating this and calling the manager and trying to figure out this process, they told me, they said, we didn't always used to have bad credit. We actually used to have really good credit. And then our son got cancer. And when our son got cancer, we just got all kinds of medical bills. We had to take time off of work. We got behind on the medical bills and like our credit just fell apart. And we ended up declaring bankruptcy. And talking to the lender on the phone, the manager on the phone, and sharing this story, like they're able to see it. They can see it. Credit report is just like a story, and they could see the history and how it was perfect credit until medical bill, medical bill, medical bill. Like all these medical bills started piling up. Sometimes, not always, but sometimes when there's a story to tell, that lender, that manager, they're willing to bend a little bit because they can see that story unfolding in front of them. Another example I had like that, we were at this older gentleman's house, and it had been years since Hurricane Katrina, but he was still missing his roof. He didn't even have a roof on his house. He had tarps over his roof, which was causing a lot of water damage on the inside of the house. And now this was springtime in Louisiana, and I'm from the north, all right? So I already thought it was humid and hot. Like it's already unbearable for me. It was a cool spring to them though. But the heat was coming. Summer was coming. And this guy's elderly. He's old, doesn't have a roof, doesn't have air conditioning. And here was the problem when we submitted his financing and then we called in and asked, what do we need to do to get him approved? Problem was he was what they called a ghost. It's not that he had bad credit, it's just that he had no credit. Like he hadn't used credit in any capacity in the last 20 years. But he had good credit 20 years ago. It's just he hasn't had a credit card, hasn't charged anything to a credit card, hadn't had an auto loan, hadn't had a home loan. He just had no credit. And so they called him a ghost. And he was declined because of that. Now, they laid out the path for us of like, we need money down and cosigner and all these things, right? But again, telling that story of like, look, we're in Louisiana. This guy doesn't even have a roof yet, right? And he has no air conditioning. And that is not good for an older gentleman in Louisiana when that hot, humid summer is coming. And, so, and telling that story, but also pointing out like, look, this guy's getting penalized because he did everything right. It's not that he didn't pay anybody back. He's not a risk. And so telling that story, they were able to bend a little bit on the money down and we got the gentleman approved. So situational, but sometimes there's a story to tell there. And adding in that story helps the lender bend a little bit if you're talking to the manager. So there you go. Strategies to maximize financing. 1 time out of 10, it's going to bite you in the rear. 9 times out of 10, you're going to gain a customer for life because you helped them when no one else would. That's today's question of the day. If you're enjoying question of the day, follow, share, and give a rating. Question of the day is on major streaming platforms. If not, keep it to yourself. You're not listening anyways. If you have a question, reach out to me either on social media or email. Both are going to be listed in the show description. Let's get your question answered. And if you're a Nexstar member, schedule a call with me. Let's get this addressed one-on-one. Let's get specific to your situation. I'm Coach Chris. We'll see you tomorrow.